Hello everyone, I am Eki Ismawati with NPM 234124041 from Accounting Class 23A. In this video I will explain about income tax. Definition of income tax. Income tax is a tax imposed on income received or earned by taxpayers, both individuals and entities. Income tax is a direct tax levied by the state with the aim of financing state development activities and providing public services. Income subject to income tax includes various types, such as salaries, honoraria, business income, investment profits, and other income earned by taxpayers. Tax subject. Income tax is imposed on tax subjects, consisting of individual taxpayers, individuals who meet the criteria as taxpayers, whether they live in Indonesia for more than 183 days a year, or who intend to stay longer. Corporate taxpayer, legal entity or company that has business activities in Indonesia, including organizations, associations, foundations and cooperatives. Tax object. Income tax objects include income received or earned by taxpayers, such as salary, wages, honorarium and rewards, namely income obtained from work as an employee. Income from business, namely income obtained from certain business activities or professions. Income from investments, for example interest, dividends, royalties and capital gains. Other income, such as gifts, inheritances, and profits from the sale of assets. Types of income tax. The following are the types of income tax that apply in Indonesia according to the category of income received or earned by the taxpayer. Income tax Article 21. Income tax Article 21 is imposed on income received by employees or individuals who work with employee status. Article 21 income tax withholding is carried out by employers, for example companies, who must deposit taxes into the state treasury. Types of income subject to income tax Article 21 include salaries and wages, perks and bonuses, other income received by employees in the form of money or in kind. Income tax Article 22. Income tax Article 22 is imposed on certain transactions, such as imports of goods and sales of goods carried out by taxable entrepreneurs. This tax is collected by authorized agencies, such as customs and excise and parties carrying out goods transactions. Several examples of the imposition of Article 22 income tax. Income tax on imported goods, collected by customs. Income tax on the sale of goods classified as luxury goods or certain goods. Income tax Article 23. Income tax Article 23 is imposed on income received by parties other than employees, for example income received from rent, royalties or payment for services. This income tax is withheld by the party who pays the income to the recipient and deposited into the state treasury. Income subject to income tax Article 23 includes, among others, royalties, e.g. payments for copyrights, patents and trademarks. Rent and income from the use of property, such as rent for land and buildings. Professional services, such as honoraria for consultants, lawyers, or accountants. Income tax Article 24. Income tax Article 24 relates to tax credits that can be claimed by taxpayers who pay taxes abroad. This applies to taxpayers who conduct business or receive income from abroad. Income tax Article 24 provides an opportunity for taxpayers to get foreign tax credits, so that taxes paid in other countries can be deducted from taxes owed in Indonesia. Example of application of income tax Article 24. Taxpayers who earn income abroad and have already paid taxes in that country can apply for foreign tax credits to avoid double taxation in Indonesia. Income tax Article 25. Income tax Article 25 is a tax obligation that must be paid in monthly installments based on the estimated income received by the taxpayer. These installments are made periodically and are calculated based on income in the previous year or based on estimated calculations. Corporate or individual taxpayers who have a fixed income are required to pay Article 25 income tax installments every month. Income Tax Article 26. Income Tax Article 26 is imposed on income received by overseas taxpayers who have income in Indonesia. Income Tax Article 26 applies to income originating from Indonesia and received by foreigners or foreign entities, such as income from dividends, interest, royalties, and other payments received from Indonesia. Income Tax Article 26 is deducted by the party paying the income and is subject to a certain rate which can be reduced in accordance with international tax treaties. Conclusion. Income tax is a very important tax in the taxation system in Indonesia and functions to finance the country's development. Every taxpayer must fulfill their tax obligations appropriately, including reporting and making payments according to the type of income and applicable regulations.